cash crisis. We're talking about Venezuela once again.
Systemic important banks. They removed the one thing on there called monetary
RTD Live Talk, aftermarket news wrap up. Excited to be back for a happy Monday to everybody. Hope everyone's doing well. And I want to just comb through some headlines that caught my attention and share my 2 cents on stories as they unfold. And more importantly, welcome any first-time viewers to the community. And make sure you guys plug in tonight at 9:30 Eastern Standard so that we can have a little live talk where you get a chance to call and let your voice be heard. So hope everyone's doing well. For those that might be jumping in as of now, let me see, give it a second here. Hopefully more people are notified. I have about 4 or 5 different stories to touch on. I think the most important one happens to be surrounding the unraveling of the Eurozone experiment and how, based upon just the very headlines themselves, lets us know the true state of affairs in the region known as Europe, and how, based upon the attempt to fight inflation by trying to reach the neutral zone by raising rates from negative to somewhat positive, nominally speaking, how it's causing some severe debt issues that never went away. And it's exposing how fraudulent this attempt and saving the economy and doing all the things that we're being told that they're trying to do, how unrealistic it is. And in my opinion, it will at some point lead to some type of systemic event that will just fall like dominoes all across the global markets. And so could it be Europe? Who knows? But there's several lit fires in various areas. And it looks like the ECB might be attempting to pour more gasoline on a fire. So it's like, how are you really going to solve that? So we'll get into that. But before I do, welcome to the chat. Let me make sure more people are notified. Appreciate everybody for blessing me with your presence. And just to do some homework on my side, or some maintenance rather, want to encourage everybody, if you happen to come across this for the first time, hit that subscribe button as well as that bell notification. And if you don't mind, hit that thumbs up button so more people can get this type of alternative content. All right, let's jump right in. So I want to start off with some good news, of course. There's always good amongst all this bad, but you have to be intentional. You have to go look for it yourself. And just let me pull up on my screen here. Let me get myself situated here. Give you a little bit of a dose of good news this morning. So this is my morning contribution to the community as far as trying to be of encouragement from a spiritual standpoint. And this is just a little word I grabbed from my studies from Psalms. And it says, from the rising of the sun to the place where it sets, the name of the Lord is to be praised. And so I said, happy Monday. Don't forget to give the King praise today. Let's rise and grind for the King. So no matter where you're at, what you're experiencing, there's more than enough things to be grateful for, as well as to acknowledge the source of those blessings. And it happens to be the one who paid the ultimate price for you and for me. And just a little words of inspiration for those out there. But let's jump into the headline. So I got lots of thoughts to talk about, man, but let me just take it one at a time. Let's just jump on this headline right here and we'll move forward. But just the headline itself is real short and sweet, but it carries so much weight in reference to the narrative that they're trying to paint on top of reality. So things are crumbling. Everybody who's tuned in here, you know what time it is. But then again, they have to sell the narrative that they're in control, everything's stable, there's growth, there's recovery, there's all those good words. But numbers don't lie. And debt definitely always reveals itself as being a problem for whoever has to service it, because you can't service debt without true growth. And there is no growth no more because it's all been papered over and stimulated on. So anyway, Europe faces severe risk of disorderly financial market correction. And that's just a nice way of saying Europe faces the most extreme event in its 2019, almost 30 year or so 20-year, give or take, 2020 years, yeah. So over 20 plus year experimentation of trying to combine these nations under one entity to do what? I don't know, but financial market, and they said correction. But then we all know how serious things really are. So just throw in financial market crash, correction, event not seen since beyond the Great Depression type of event. And that's the more realistic approach, given the fact that it's just not an isolated event in Europe, US, Asia, China, Africa, South America. All those regions have similar style events unfolding right now, to where it's just interesting to see this headline out there trying to downplay this event. But give you a heads up real quick. This came out today from Christine Lagarde. And just it says the risk of an abrupt correction, like out of nowhere, like it hit me like, oh, it's just this. Well, where did this come from? On Europe's financial and housing market is high. European Central Bank said on Monday, quote, risk to financial stability has precipitously increased since the beginning of this year. You don't tell me that. And she said in her capacity as the chairman of the European board, the European Union Financial Watchdog says, while the correction is in asset prices has so far been orderly, the risk of further and possibly abrupt fall in asset prices remains severe. So ultimately, she's telling you the bubbles that they've inflated over the last decade plus, give or take the advent of QE, has ran its course. And the problem I'm sure they saw years ago was that you can't artificially stimulate real world items by inflating their valuations and then not run into an issue on the other side of that, where the government is also taking on large amounts of debt. And then while you're raising that, you've lowered rates to incentivize borrowing from governments and from households. And then all of a sudden, the monetary base expansion catches up with you in actual prices of everyday goods and services, to where now you're trying to fight that and bring it down, but you run into this debt trap over here, to where now, as you dial back on your accommodative policies, the debt cost goes up. Therefore, the unsustainability of the government's debt also becomes a problem, to where you have, a debt crisis that's unfolding that never went away, but was maintained by dropping rates even lower. So here we are now, the day of reckoning is upon us, and they're talking about the concerns of asset prices have so far been orderly. Depending on who you ask, what country you're looking at, I don't think it's all been all that orderly. And here's a little more insight as to how they're lying about this orderly asset price issue that they're facing. Let me just jump ahead of myself real quick. And so right now, this came out in Germany. And so Germany, CPI, PPI, as of right now, this is a chart out of what's happening in Germany. And to me, this does not look orderly whatsoever. And so as you guys can see here, we have the CPI is 7.9. That's what we're being told. But then again, you look at the producer price index, which is 33.6. So even if you were trying to come to a realistic number, you have to go a lot higher than the 7.9 to make it seem logical. So I would say automatically, let's just, on a worst case scenario, just double this current CPI figure, which of course don't include certain things. It doesn't include the most important things that should be calculated. So just put that up to 15-ish, 16, 17-ish, maybe even 20 in Germany. I don't know, but if I got any of my German folks out there, let me know as far as what you're seeing in additional euros needed to acquire everyday goods and services. And so just these numbers here let you know this is not orderly, to say the least. But, I'm not an economist. I don't know anything. And so let's keep it moving right away. So just this confession of a financial market crash that they're keeping an eye on, it should be of concern. Next article here. This is an interesting one, because to fight this, they're going to do more of the same, but they're still trying to paint it as if it's new. It says, Villeroy says ECB's tool. So here we go, talking about tools again. They got tools, and these tools just seem to not work, but they still have tools. What are they trying to fix with these tools? I think these tools, the history books will reveal that these tools were actually demolition tools used to break down the old monetary structure and to usher in the new. And so these tools, we usually associate tools with fixing things, but yet in reality, these tools are bringing things down in a less obvious way, in my personal opinion. But let's just listen to some of these buzzwords. I had to highlight some things here because I just couldn't believe what I was reading. But um, so just constructive ambiguity should govern officials' approach. Just look at these buzzwords. Okay, they keep it going. And so it says the European Central Bank the new anti-crisis tool should show that officials' determination to defend the integrity of the euro has no limits. Like, what does that mean? That's central bank talk. Because the new anti-crisis tool shows that the determination to defend the integrity of the euro is debt, and it's a debt measurement that has been thrust upon, I think, 19 different nations, if I'm not mistaken. Anyway, so it says while there are still quote open issues. Oh, you mean there's a lot of open issues there on the measure pledged last week to address so-called fragmentation in the region. Fragmentation. You got all those different nations and problems. You think it's so-called fragmentation? You got a cluster. You know what I'm saying? And then he's quoted as saying, so this is the Bank of France's governor who I'm referring to. It says it should be available as much as possible so as to make our no limits commitment to protect the euro very clear. So this new asset tool, anti-crisis tool, is designed to stabilize and prevent the euro currency from going belly up. And the euro currency in of itself is a derivative of the debt that has been issued that is unsustainable. So you got a burning flame, and you're going to put more what on it to accelerate even more. And then here's just more jargon about what they're going to try to do. But then here's the interesting part. It says he added that the ECB crisis bond buying should be offset by selling other securities so that the purchases do not compromise its efforts to fight record inflation rates. So the tool they're talking about is the ECB's crisis bond buying that is going to be rolled out in some capacity. Even Lagarde today says she can't comment on what it looks like. But I'm thinking, like, you have no reserves, you have nothing of substance as the ECB entity, but you're going to buy these bonds that are overly distressed from the pig nations, predominantly Spain and Italy, and amongst others, and you're going to buy them, which is the same thing you've been doing all along. So where's the new tool that you're talking about? Like the ECB crisis bond buying program you've been doing it already. But anyway, I'm gonna keep going. You get my drift. But this is a systemic nature of how ludicrous things are, but nobody seems to really challenge it other than alternative media. But here's the last article on this subject here. We move on to more other things. But I had to use this one. Europe does not face a fresh sovereign debt crisis. So when I saw this word fresh, so you mean to tell me you're not facing a new crisis, you're talking about the old crisis that never went away, that you have been papered over into this point. And now that you're trying to fight inflation, you're dialing back accommodations and it's not fresh. It's the old problem. So anyway, not facing a fresh sovereign debt crisis, but the fact they admit that it's a sovereign debt crisis on top of what was never solved before lets us know that, something has already broken. And then I'll just scroll down this guy here. It says Eurogroup President Pascal Donaghy says reforms since the Eurozone's debt crisis have put it in a good position. So they're in a good position right now. And they're talking about a new asset tool, which is the ECB bond buying crisis program. Yeah. So last thing here, as the ECB joins other policymakers in lifting interest rates, those fears have intensified. So they're raising rates, which is causing fears, i.e. the bond crisis, sovereign debt issue. It says Italian and Spanish bond yields hit their highest levels for 8 years last week as the market jitters intensified. And so apart from there being a little bit of a cooling off with the bond yields for those countries because of this new asset buying program, nothing has changed. They're not really trying to dial back. They're not trying to prevent inflation or fight inflation because they can't. Game's over. Checkmate. People who hold the euro will definitely be victimized even more. And what's happening in Germany with the CPI, PPI is just starting. Is basically to sum this up. And every nation is in on the same program because it's all a Ponzi scheme in nature. It's debt based and nothing comes from debt, especially if there's nothing real backing it. So, yeah, nothing new here, but yet a systemic event. So, this was my thoughts on this real quick, and I'll move on to the next article. So, we got Europe, which is crumbling right now in real time. And the reason why their event, in my opinion, is accelerated more than the U.S. Multiple reasons, but the primary one is that the ECB for the last 6 years or so were already in negative territory. They were already negative for the most part in various countries inside of Europe, and just the mere threat of raising to become positive to get to they're fighting neutral, which is just zero. They're having a meltdown right now, and they're talking about just going to zero. They're not talking about going positive. Like right now we're, the Fed got us up to almost, 2%, give or take, 1.775, whatever. So we're already positive, real terms negative already because of inflation, whatever. But they're just talking about trying to get to zero, and they can't do it, and they're going to have to go back. So will they? So is this already the ECB pivot? Is this this bond ECB bond crisis program that they're rolling out? Is this already the pivot away from fighting inflation to where they're going back to easing, but they're not calling it that? So the question is, how much longer before the Federal Reserve has to pivot as well? And this is where my suspicion, I don't think the Fed will pivot nowhere near as fast as the ECB, because the Federal Reserve being the world reserve currency, the Dixie, the trade weighted dollar version is continuing to increase. So it makes it look like, the dollar is strong, but in actuality, we're the current, the Federal Reserve note. And I even but I was talking on Twitter a little bit earlier with some people about how, the dollar, the dollar's not going nowhere. It's not going nowhere because it is the current measuring stick for all fiat currencies. But the problem is all the fiat currencies that is weighted against or measured against the Federal Reserve note looks bad compared to the dollar. So they're all, debt instruments that has no long-term future. So there's a shift happening right now. But in the meantime, the dollar will be the last. So we know that. So it gives us more time. So the Federal Reserve can continue on this jawboning of, fighting inflation for quite some time. But unfortunately, it's not going to work because they can't hide the fact that prices of goods and services in the real world will continue to go up, barring some type of bubble that bursts. Therefore, that deflationary contraction that is inevitable will also occur. But then it's all about the response. Will they begin quantitative easing to infinity, literally, therefore driving us towards that hyper inflationary event that always happens throughout history? And I just got my questions as to how that'll play out because, mind you, Jerome Powell, Christine Lagarde, and everybody else that's in the central banking cartel, they have signed on for the Great Reset. So the Great Reset means a complete shift and a redo of everything. Therefore, that's why I question a third round of permanent QE from the Fed, because it just seems like they'll be more likely to settle for a reset and then the introduction of something else, i.e. that from last night I talked about the CBDC coming out of the Federal Reserve and them using the CBDC as a preferred method to provide liquidity for the markets of some kind. I don't know. But anyway, keep it moving. So just a more insight as to what's happening around the world. I think paying attention to what's happening in the European region definitely is good because those nations are dependent upon the Federal Reserve in a sense. So they'll probably go belly up first, therefore creating more of a systemic event. And ultimately, and this is just my opinion, there's going to be a bank, there's going to be a country or two within the European Union that is probably the most distressed. And it'll probably be Spain or Italy that will probably implement the bail-in concept first. So be on the lookout for a news article coming out to where, due to the debt crises, they try to recapitalize, the country by using depositors' funds, i.e. bail-in. So it's happened before. It can happen again. So the last bail-in was with Cyprus back in around, it was 2013, 14 or whatever it was, where it was due to debt, insolvency, and restructuring of debt using depositor funds. So it's baked into the ECB little, bank regulation / insolvency resolution program, just like it is here in Dodd-Frank in the U.S. Anyway, so systemic event, bail-ins are still on the table. Lawfully, it's legal too. Okay, sterling has further to fall as the Bank of England wrestles growth inflation conundrum. Oh, yeah, sterling, another currency. Another currency that will be weaponized against the people, which it already has. And so, just you guys know, and even Mario, we talked about this before, but sterling has fallen more than 9% against the US dollar so far this year, despite a recent reprieve. Currency strategist sees further pain ahead for the pound, no doubt. And just to give you an idea, like I want to pull up a different way of measuring the price, value, whatever you want to call it. So I got the gold here versus the British pound. And so this is a 10-year chart. And so even if we were to do a one-day situation, the pound is appreciated versus dollar. Let's go 1 month, 1 week, about the same, 1 month. So over the last month, there's been a shift in how the British pound has been responding when it comes to being priced in gold. And so you go 1 year, gold has been doing well. You go 2 years. So you see that. So within this short last 30-day window, the pound, when weighted against gold, there's been a flippening. And that's with every other currency as well. So except the USD, but be patient. It'll come. Anyway, keep it moving. Here's some interesting news here for my crypto folks. This is what we're going to see more of, in my opinion. And this is minor now. This is minor. But then again, all it takes is one. And then others will join suit, especially when it's a climate agenda that is a part of the green net zero agenda. But Iran announces they're restricting Bitcoin mining by cutting off electricity amid high energy consumption. It says electricity to all 118 BTC mining operators in Iran will be cut off starting June 22. So this is just information out of Iran. Iran is a non-important country to the grand scheme of things, but just keep that in mind. Iran is an energy-rich country at that. Like, Iran has a lot of energy, but yet they're cutting off their miners. So that lets me know that there's a possibility that more nations could join suit due to the greatest agenda, which is the climate. So just something to keep in mind. But of course, it won't affect the hash rate. Just, it's minor. But this is the type of stuff we will see more of. Let me see here. So here, to even hurt the situation, the EU even more, EU is working on its 7th package of sanctions against Russia. This is a couple week or two old, but the fact they're still in the midst of all this, they're still trying to stick it to Russia as if it really hurts them. Lets us know that this is a deliberate destabilization act within Europe. They're doing it on purpose to get all this chaos and pandemonium going as a cover-up for this debt sovereign crisis unraveling, which is the primary focal point of all central banks, because they've gotten themselves on purpose in this fiasco and they need as many excuses as possible. And keep it moving. So here's the last one here. This is another little crypto thing, but I think it's very important to pay attention to this because this is a bankster agenda here. And this goes to my consensus war, which will definitely be coming sooner than people are willing to admit. And it says Ethereum mining is going away and miners are not happy with it. And this has to do with the shift from proof of work to proof of stake will cut power consumption and leave some expensive technology searching for new uses. So all this mining equipment that has been purchased over the last umpteen months, because every 2 years you got to get a whole new mining rig operations, but there's going to be a lot of people looking to scramble for new projects to support. And of course, the hash rate will probably fall into Bitcoin. And then that right there will probably put more of a argument about the energy consumption by this very intensive rigging operations around the world. And all along, if the shift to proof of stake succeeds, the bankers will have succeeded in capturing the entire Ethereum Layer 1 protocol module, which is all intended to allow the banks to get into the DeFi game and the metaverse and all those futuristic uses of the digital asset space will then belong solely to the banking and the central banks and all those people. And people say Ethereum is slow. It's slow now, but with the right funding by the banks and all those people wanting it to succeed, they're going to iron out the kinks at some point. And then at that point, when Ethereum is ready to be used by the banks and whoever else trying to use it, then that's when you're going to see the first headline. United States government, tells, proof of work miners in the United States it's time to, go green or leave the country, or it's going to be something like that, where people going to be like, they're attacking proof of work now. It's like, I mean, I can see it plain as day, but other people can't. So it is what it is. And so Value Crypto says, give some solutions, please. So here's the thing. My stance will always remain the same. We're here talking about this asset class, this new technology, because it's a part of the orchestrators of this entire transitions. It's a way for them to excite and entice a lot of fresh minds and fresh capital into this space, because this is what they plan to use in the future as a way of tokenizing the entire world and putting it on some blockchain somewhere. And so it's hard to give solution strategies or whatnot when you're dealing with distributed surveillance ledgers. Like it's not really, in the long run, to me, there's not much hope in being able to pick winners and losers when you're literally in a technology that has been set up for the future in reference to the bankings and how the government's going to use it to track, trail, surveil everybody. So it's hard. And that's why I think the technology has gone awry when it became about adoption rather than disruption. Disruption wouldn't be requiring, any permission from nobody or compliance or worry about regulatory clarity. Like, why do you need clarity if you're trying to disrupt things? You let the government deal with it, not you wait and be patient for, permission to now be able to bring institutions in. No, you don't want institutions in. You know what I'm saying? Like we need, and I, had a good conversation with someone over the weekend from the community. We need an actual community and a what you call it, an actual ecosystem itself, parallel or outside of the current financial model, because people still price Bitcoin in dollar terms. You're still dependent upon the dollar. But the moment that you price the real world goods in Satoshis or whatever else, and irregard of what the dollar is doing, then you got a parallel economy. Then you can start saying, hey, I'm not going to no longer participate in your system. I'm going to do this one. And then that's when the real disruption takes place. But more people are concerned with the fiat price of their cryptos than they are the disruptive side of cryptos. And therefore it's going to be this, this tug of war until something is disrupted, and it's going to be done by the banks. So, to wait for permission to use something as a disruptive technology is bad. But that's why, because in my opinion, cryptos has been hijacked. And so there are good projects. There's good projects out there. There's good people doing big things, but they're small, and they'll never probably see the light of day on a grand scale of things because of this proof of work, proof of stake consensus war that's coming, because it's inevitable. Like they can't have, just like you're playing with gangsters, so they don't play fair. They're not going to have competition out here succeeding. Just like the CBDCs, when everybody's ready to go, you think government's going to allow mining to take place in their country legally when it's their enemy? Like running a Bitcoin, running into all these cryptos will ruin them and take away their power. So by force of law, they're going to do something with the mining side of things. And so that's just reality, in my opinion. So how come people can't see that? I don't know. But it is still young and it's untested. It's never gone through a Great Depression style event where real world goods such as energy become scarce, because like they're telling us there's going to be blackouts. They're telling us, like, because of heat, and they're using it because of heat, and the supply chain is disrupted. There's going to be blackouts. We're going to have to dial back on energy. So that alone is going to cause problems, because they're going to point at the mining rigs, which are the high intensity ones. Of course, not all of them are using the grid or whatever, but they're going to point back to and use it as an excuse, the mining space, as a way of saying that they're using energy that can be used for more productive purposes for society. For you're talking to gangsters, man. They're criminals. Like, they're going to find a way to justify why proof of work is going to be a problem. Therefore, that's when the attack starts. So, if so here's the thing. Iran is an energy-rich country. And they're shutting off all mining operations, and they got lots of energy. Why? I don't know. But maybe, like the Bitcoin is growing too strong in Iran as an alternative currency to where the real is not really, it's already been not worth nothing. So if their economy is becoming more Bitcoin centric, then that threatens their government and their power. So I can see how they can say all mining operations will be cut off by June 22nd. So that's literally on Wednesday. So on Wednesday, they will be able to tell if you're still consuming lots of power, and then it might be some arrests, some seizure of property. You know what I'm saying? See, but then again, this isn't a oil-rich nation, and they cutting it off. So I think it has more to do with the competition to the real and government's control than actually the BTC being used to disrupt things. So they're going to cut off the free market crypto miners, but the private ones that the central banks probably running for their own purposes will stay on. So, that's just my opinion. But last little thought here, and I want to share something real quick if I can, or if not, I'll probably save it for the night. But I'll save it for the night. But I want to share my thoughts as to how this past weekend's major sell-off in cryptos is just the beginning. Like it's just the beginning. Like, like this past sell-off, I was on a Twitter sphere. A lot of people were emotional, and I'm thinking like, man, like, we ain't seen nothing yet, man. Like this Eurozone systemic event, the contagion that will come from that will be so severe. Whether it's here, Asia, US, whatever, it's going to be so severe that, we're going to see a sell-off like we've never seen before, because we've never experienced what's brewing right now in real terms. Like, everything is happening in every nation. Like there's every nation is experiencing the same thing. So that right there puts all this in a category like never seen before. And the crypto space especially is so small. It's, less than $1 trillion. It's crumbs. Like nobody, other than people who are hopeful and optimistic about it, the real world don't care about cryptos because they don't produce nothing. Like, having Bitcoin don't feed you. Having Bitcoin don't put, clothes on your back. You know what I'm saying? It's just a speculative asset that can be used in normal times as a hedge, but it's never been tested. So my point is, the biggest concern will be this. Let me put this on the screen real quick if I can. Yeah. So I put this tweet out over the weekend just to give people a much bigger viewpoint as to what's really important. And so here is a picture. This is the largest companies by market cap, and it totals $78 trillion. So 6,200 companies globally. And these are companies that produce real things, whether it be your iPhones, your MacBooks, your Samsung phones, your clothes, your shoes on your feet, or anything that is real is valued at $78 trillion right now. And my whole point was, all people were panicking and fearful over, and this is over the weekend, cryptos is valued at 876 billion when it got down to the bottom. And right now it's still beneath 1 trillion. So that's 78 trillion versus 1 trillion. And the 1 trillion in value of digital assets is all speculative. Like that's 10,000 total coins, of which only 10, 20 are really good for anything in the long run. So that right there chops down the market cap of cryptos that even more. And we're talking about a completely systemic global wide event that will impact the worth of 6,200 companies that the world depends on. And this is way more important than talking about digital assets, as if like it's going to matter. Because it's just people's anyway. But okay, well, anyway, that's enough for this weekend. Not this today, rather. I'm sorry. So anyway, so just my thoughts. Europe, things is falling apart. It's a lot worse than what we're being told, and it could be the pin that pricks the global bubble. Who knows? But the air is definitely seeping out of the bubbles, and that's why they're having problems, because when the air seeps out of these bubbles, it's reflected in higher bond yields, therefore making debt that much more unsustainable. And then in the revaluation of housing prices and all those assets that people use as a net worth gauge, which is artificial, so they're having problems. And then when you go to the store, just sticker prices, that's a problem. So, but anyway, be of good cheer, people. It's all good. God will see us through this. As always, it's just going to be different because nobody has ever experienced this in modern history. And therefore, you're gonna need a little bit of some extra in the form of wisdom that is not of this world. So that's why it's never been more important to get your faith up, because you're going to need some divine guidance for sure, outside of whatever you do in a practical sense. But anyway, people, be blessed, be safe. If you've enjoyed this, definitely hit that thumbs up button, show your support. Hit the subscribe button and the bell. See you tonight at 9:30. Take this video, share it with your family and friends so people can see what's going on. Because once again, you ain't going to see this on 247, CNN, CNC, Fox, and all them other places because they get paid a lot to you. Yeah, I don't get paid a lot to you. So anyway, peace.
The next recession.
Recession will be.
Will be a recession.
We're going to hit a recession.
The date of the next recession.
A U.S.-only recession typically lasts 8 to 10 months.
A crash is coming now, whether it's 6 months from now, 12 months, 36 months, no one knows.
If you have the right plan to set up, you can make a lot of money from this.